Ever feel like your emotional stability in trading is completely random? Some days, everything just clicks. You sit down, the chart is clear, your mind is quiet, and your body is relaxed. Waiting for a setup doesn't bother you at all. You can just observe the market without feeling pulled in every direction. Then there are other days. Using the exact same strategy, the same rules, and in the same market conditions, everything feels heavier. You're tense, but you don't know why. You feel impatient even when nothing is happening. You're just emotionally fragile, reactive, or a little on edge. There's no obvious mistake, no big loss, nothing you can point to that went wrong. Yet the whole session just feels unstable. This inconsistency is what confuses most traders. It feels random. One day you're in control, the next day you're off balance. And since there's no clear external reason, most traders look inward and assume the problem is them. They tell themselves they're inconsistent, that they lack discipline, and that a mentally stronger person would be able to stay stable. But here's the thing. Emotional stability doesn't work the way most people think it does. It's not something you build once, and then just hold on to forever with willpower. It isn't a fixed personality trait, and it's definitely not governed by motivation or those mindset slogans you see everywhere. Emotional stability is state-dependent. Once you understand what actually determines that state, the feeling of randomness starts to fade away. First, let's normalize this experience. Even the most disciplined, professional traders have emotional ups and downs. They have days where everything feels easy and days where everything feels heavy. The real difference isn't that experienced traders are emotionally stable all the time. The difference is that they don't interpret instability as a personal failure. Most traders expect their emotions to be as consistent as their strategy. They think, if my rules don't change, my internal experience shouldn't either. But your nervous system doesn't just hit a reset button when the market opens. You don't start each trading day with a clean emotional slate. You carry load. You carry load from previous trading sessions. You carry load from stress outside of trading. You carry it from poor sleep, from decision fatigue, and from spending too much time in front of a screen. That load builds up quietly, and your emotional stability isn't determined by how disciplined you are in that moment. It's determined by how much load your nervous system is already carrying before you even start trading. This is the key idea that most traders miss. Emotional control isn't about suppressing your feelings. It's about capacity. Your nervous system has a limited capacity to handle uncertainty, decision-making, and waiting for outcomes. Trading demands all three of these at the same time for long periods. Every time you wait for a setup, you're tolerating uncertainty. Every time you don't click the mouse, you're resisting the urge to just do something. Every time the price moves without you, your nervous system has to stay regulated instead of reacting. That regulation costs energy. On days when your baseline load is low, your capacity feels high. Waiting is easy. You can handle a drawdown. You accept the market's randomness. Price movements don't feel personal. But on days when your baseline load is already high, that same uncertainty feels overwhelming. Small losses feel heavier. Waiting becomes unbearable. Normal market volatility can feel threatening. Nothing about the market actually changed. Your internal capacity did. This is why emotional stability feels random. It's not random at all. It's conditional. The problem is, most traders never learn how to track or manage the conditions that affect their capacity. They only judge themselves based on their behavior. So when they feel unstable, they automatically assume they're doing something wrong. They try to lock in discipline. They try to force themselves to be patient. They try to override their emotions with logic. But that rarely works. Because once your nervous system's load crosses a certain threshold, logic becomes expensive. Your brain starts searching for relief. Relief can come from getting certainty, from taking action, or just from being done with it all. This is why emotional instability doesn't usually show up as panic or fear. It shows up as a subtle impatience. You feel this quiet urgency to do something. You get irritated with slow price action. You feel mentally restless even when everything is fine. And because those feelings are subtle, traders often mistake them for intuition or clarity. They tell themselves they're just adapting. They justify small deviations from their plan. They convince themselves that today is just different. In reality, they are trading while overloaded. And this is where emotional instability turns into behavior. You might take trades earlier than you planned. You might reduce your confirmation criteria without even realizing it. You might feel drawn to marginal setups or trade just to feel productive. None of this feels reckless in the moment. It feels perfectly reasonable. That's what makes emotional instability so dangerous. It bypasses your internal warning system. By the time you consciously realize something is off, your decisions have already been influenced. Over time, this creates a painful pattern. Some days you trade well and feel confident. Other days you trade poorly and feel completely confused. You start questioning your consistency, doubting your mental strength, and wondering why you can't just stay stable. But the real issue isn't inconsistency. It's unmanaged load. This is where most traders misdiagnose the problem. They think they need more discipline, stronger rules, or more motivation. But discipline cannot override an overloaded system. Willpower only works when you have the capacity for it. When that capacity is gone, willpower fails quietly. That's why trying harder often just makes things worse. You're asking an exhausted system to perform at a higher level. Instead of fighting instability, the solution is to manage what causes it. This means shifting your focus from emotional control to load management. Here's what that looks like in practice. First, stop expecting to feel the same emotionally every single day. Consistency in trading doesn't mean emotional sameness. It means responding intelligently to how you actually feel. Second, start managing your inputs, not just your behavior. Sleep matters more than most traders want to admit. Screen time builds up fatigue. Stress from your personal life bleeds into your trading decisions. Long sessions drain your capacity, even if you feel like you're doing nothing. None of these seem like trading variables, but they directly determine your emotional stability. Third, reduce your decision frequency when your capacity is low. You don't have to trade the same way every day. On low-capacity days, making fewer decisions is a form of protection. Waiting more isn't a sign of weakness. It's smart load management. Fourth, build disengagement rules. Decide ahead of time when you will step away from the screen, when irritation shows up, when that sense of urgency rises, when your patience disappears. These are not signs of failure. They are signals that your capacity is being exceeded. Finally, prioritize recovery as a trading skill. Recovery restores stability much faster than motivation ever will. Walking away from the screen, reducing your exposure, ending your sessions early, and creating a clear separation between trading and the rest of your day. These actions don't feel productive, but they are what preserve your consistency in the long run. This is why emotional stability improves with experience. Not because emotions go away, but because experienced traders stop demanding stability from themselves when the conditions don't support it. They learn to work with their nervous system instead of against it. They don't see unstable days as personal failures. They see them as information. And that mindset shift alone reduces a huge amount of emotional volatility. So, if your emotional stability has been feeling random, it doesn't mean you're broken. It just means you've been judging yourself by your behavior instead of by your capacity. Once you start managing your load instead of trying to suppress your emotions, stability stops feeling so mysterious. It becomes predictable. And predictability is what allows true consistency to grow. And that's the trader's hidden edge. If this helped you understand why your emotional stability fluctuates, hit the like button Subscribe for more insights into trading psychology. And leave a comment sharing whether your emotional state feels predictable or random from day to day. Thanks for watching. I'll see you in the next one.